How is decentralization and CBDCs going to change our world? This week we'll talk about the implications of Bitcoin, decentralization, vending machines, and even CBDCs on our future. Stay tuned. How do I bring my faith to work? How do I tap into the power of God in my work-life call? Why am I going through this adversity? Is God mad at me? I'm Os Hillman, and I've been helping leaders like you answer these questions and more for over 30 years. That's what this podcast is all about. Let's learn and grow together. Welcome to TGIF, Today God is First. This week, we're going to pick up where we started last week about talking about the adoption of Bitcoin and decentralization. Today, I want to start by talking about Bitcoin vending machines, which is something fairly new in our country. According to a report by Coin ATM Radar, as of May 2021, there were over 42,000 BTMs globally, Bitcoin TMs, with the majority located in the United States. In fact, the United States accounts for over 81% of all BTMs worldwide, with over 34,000 machines installed. The number of BTMs has been steadily increasing over the years. In 2014, there were only a handful of BTMs in the world, but by 2021, the number had grown to over 42,000. This growth is attributed to the increasing popularity of cryptocurrencies like Bitcoin and the increasing acceptance of cryptocurrency transactions in mainstream businesses. Despite the growth of BTMs, they still represent a small fraction of total cryptocurrency transactions. Most cryptocurrency trading and transactions are done through online exchanges or peer-to-peer platforms. It's worth noting that the growth of BTMs may vary by region, with some countries being more open to cryptocurrency adoption than others. Additionally, regulatory and legal factors may also affect the growth of BTMs in certain jurisdictions. Bitcoin vending machines are also known as Bitcoin ATMs or Bitcoin kiosks, and they work similarly to traditional ATMs, but instead of dispensing cash, they allow users to buy or sell Bitcoin and other cryptocurrencies. Here are the typical steps involved in using Bitcoin vending machines. First, they verify. The user is required to verify their identity by providing identification documents such as a government-issued ID or passport, or sometimes a phone number for SMS verification. They need a wallet address. The user enters their cryptocurrency wallet address, which is a unique code used to send and receive cryptocurrency. Then they need to identify the transaction type. The user selects the transaction type, either buying or selling Bitcoin. Then the payment. If the user is buying Bitcoin, they can insert cash into the machine, and the equivalent amount of Bitcoin will be transferred to their wallet address. But if the user is selling Bitcoin, they can scan a QR code from their cryptocurrency wallet and receive cash in exchange for the Bitcoin. Then there's confirmation. The transaction is confirmed and the user receives a receipt or confirmation on the screen. The fees charged by Bitcoin vending machines can vary depending on the BTM operator and location, and the exchange rate may differ from the market price due to the fees charged by the BTM operator. It's important to note that Bitcoin vending machines are not available in all locations and countries, and users should always do their due diligence before using a BTM. Now let's talk a little bit more about decentralized financial systems that we introduced in our last session together. If you didn't listen to our last session, I encourage you to go back and listen to that. This is part 2 of this talk on this topic of decentralization. So decentralized digital finance, often referred to as DeFi, is a new form of financial system that is built on the blockchain technology, which enables trustless and transparent transactions without the need for intermediaries such as banks or governments. Here are some ways in which DeFi is lessening control by governments and banks. Open and permissionless access. DeFi allows anyone with an internet connection to participate in the financial system without the need for intermediaries such as banks or governments. This means that people can access financial services that were previously unavailable to them or were controlled by banks and governments. Decentralized governance. DeFi is built on decentralized blockchain technology, which enables decentralized governance. This means that no one single entity has control over the system, and decisions are made collectively by the community. This reduces the influence of banks and governments over the financial system. Third is transparency and immutability. Transactions on the blockchain are transparent and immutable, meaning that they cannot be altered or tampered with. This provides greater transparency and accountability in the financial system, reducing the potential for corruption and misuse of funds by banks and governments. Number 4 is lower fees. DeFi operates on a peer-to-peer basis, meaning that transactions occur directly between users without intermediaries such as banks or payment processors. This reduces the fees associated with traditional financial systems, which are often controlled by banks and payment processors. Overall, decentralized digital finance lessens the control of governments and banks by providing open and permissionless access, decentralized governance, transparency, and immutability, and lower fees. This creates a more democratic and accessible financial system that's less reliant on centralized intermediaries. Many who fear the overreach of government and bank institutions see decentralized platforms as the key to ensuring freedom in managing their money. Let's talk about decentralization versus national and government elites. Control. You see, national leader elites may not like decentralized digital platforms for several reasons, and we're beginning to see this power struggle over the digital financial systems of the world because of that. There are several reasons that elites may not like this move toward decentralization. One is a lack of control. Decentralized digital platforms operate on the blockchain technology, which enables trustless and transparent transactions without the need for intermediaries, such as banks or governments. This means that national leader elites may not have control over the system, reducing their ability to monitor or regulate transactions. Number 2 is a potential for illicit activities. Decentralized digital platforms have been associated with illicit activities such as money laundering, terrorism, financing, and tax evasion. This makes national leader elites wary of these platforms and may lead to them being viewed as a threat to national security. Number 3 is a disruption of traditional financial systems. Decentralized digital platforms can disrupt traditional financial systems, which are often controlled by banks and financial institutions. This may lead to resistance from national leader elites who may be reluctant to see their power and influence over the financial system diminished. Number 4 is a lack of legal frameworks. Decentralized digital platforms operate in a regulatory gray area with limited legal frameworks in place to govern their activities. This may lead to concerns among national leader elites about the potential for fraud or misuse of funds or an inability to capture taxes from crypto trading. Overall, national leader elites may view decentralized digital platforms as a threat to their control and influence over traditional financial systems, as well as a potential threat to national security. However, as decentralized digital platforms continue to gain popularity and legitimacy, it is possible that national leader elites may become more open to their use, provided they are properly regulated and monitored. So look for a real power struggle between centralization and decentralization in the financial markets. Now let's talk for a moment about the risk of CBDCs, known as central bank digital currencies. Earlier, I defined central bank digital currencies as digital currencies issued by central banks that are backed by a country's fiat currency. While CBDCs offer several potential benefits, such as increased efficiency and reduced transaction costs, there are also many potential dangers associated with their adoption. Here are just a few. Number one, privacy concerns. CBDCs are issued and controlled by central banks, which could give them access to a vast amount of personal financial data. This could potentially compromise the privacy and security of individuals' financial transactions, leading to concerns about surveillance and government control. 2. Financial stability risk. CBDCs could potentially destabilize the financial system by causing disintermediation, which means bypassing traditional financial institutions. This could lead to a reduction in the demand for bank deposits, which could affect the lending ability of banks and disrupt the traditional banking system. Number 3, cybersecurity risk. Digital currencies are vulnerable to cyber attacks, and if a CBDC system is not adequately secured, it could be vulnerable to hacking, fraud, or other types of cybercrime. This could lead to the loss of funds, financial instability, and a loss of confidence in the currency. And number 4, unequal access. Digital currencies require internet access, which could limit access to CBDs for people in areas with limited internet connectivity or technological infrastructure. This could create a digital divide where people in certain regions or demographics are unable to access the benefits of CBDCs. Overall, CBDCs offer potential benefits but also carry potential risks such as privacy concerns, financial stability risk, cybersecurity risk, and unequal access. To mitigate these risks, central banks must carefully design and implement CBDC systems with robust privacy and security measures, adequate regulations, and a broad access. To date, President Joe Biden has not issued an executive order to establish a CBDC for the U.S. government yet. However, there has been discussion among policymakers and experts about the potential benefits and drawbacks of a CBDC, and some have called for the U.S. to explore the possibility of creating a digital version of the U.S. dollar. If the U.S. were to move forward with a CBDC, it could have significant implications for financial systems and the economy as a whole. Some potential benefits of a CBDC include faster and cheaper payments, increased financial inclusion, and greater control over the monetary policy. However, there are also major concerns about privacy, cybersecurity, and the potential for a CBDC to destabilize the banking systems. It's worth noting that any decision to create a CBDC would likely require extensive research and consultation among policymakers, regulators, and industry stakeholders. The Federal Reserve, which is responsible for monetary policy in the U.S., has said that it is studying the potential benefits and risks of a CBDC, but has not made any decisions about whether to move forward with one. This is so much more sinister than simply replacing the cash dollar with a new digitized version. Friend, this is new currency will allow for total control of all American citizens. Mark Moss is a podcast presenter that features news and information around crypto and world events. His April 24, 2023 show was a very informative show about where we're going with CBDCs and its relationship to central banks around the world. He says CBDCs connect to all the other technologies that globalist bankers need for total control, and that would include movement passports such as COVID passports, but ultimately it really comes down to the money. So we're aware of China's social credit score system, where basically your entire life is in this app, and if you're a good citizen, you get more credits, and if you're a bad citizen, you get less credits. They've been doing this for many years, and if you say anything bad about the government, your social credit score goes down, and if your credit score goes down, your social credit score, you can't buy anything, and you can't buy plane tickets or send your child to college, or many restrictions. So what they're ultimately doing is using an app to restrict you. But how do they restrict you with the payments? Well, they don't allow you to buy that plane ticket or a bus ticket or food. It all comes down to the money, which is why that's the final piece that they need. So in every country, regardless of where you're from, in the United States, we have a central bank. It's called the Federal Reserve. In Europe and in England, they have a central bank. It's called the Bank of England. And they have a central bank called the European Central Bank. And in Japan, they have one called the Bank of Japan. In China, they have one called the People's Bank of China. So each nation has their own central bank. So in the U.S., we have a central bank, the Federal Reserve, but underneath the Federal Reserve is the commercial banks, and the big bank is J.P. Morgan's and Wells Fargo Bank of America. In other countries, they have HSBC or Deutsche Bank. So we have these individual banks as well as we have local banks like credit unions. Now that's a decentralized banking stack, and the reason why that's important to understand is it's important to have is because the money decisions are being made on a local level, meaning I can go to my local bank and they can give me a loan based on what it is I want to do in my local area. They would have local knowledge about money created through loans, so they have the authority to give me a loan with this local knowledge. Now, if you take that model, so we have the 8 nations as a central bank at the top and these commercial banks at the bottom, and it says decentralized stacks, but each nation has that. So again, the Bank of England has that, and then banks underneath the ECB, then banks underneath that are one step above the Fed, and the ECB and the BOE sits the IMF, International Monetary Fund. And that was created in 1944 under Bretton Woods Agreement, when the whole world agreed to this monetary system that we have today. One level above that, though, above the IMF, is something that most people have never heard of called the BIS. It's the Bank of International Settlements, and it is a very shady group. It's a very opaque bank where the origins aren't 100% clear. We don't know who's behind it, but it's the bankers, and they create the IRS, and they sit at the top of this entire stack, sit above the IMF. They sit above governments and sit above all central banks. Mason Rothschild in 1790 said, "Give me control over the money, and I care not who controls the laws." So while we're fighting in Russia and China and Ukraine, Taiwan, etc., the people inside the nations are fighting and controlling the money to get us all to the point at which they want us, which is all of us into a central bank digital currency where they have total control. So that's the stack, if you will. That's how that works. Now, you might see one nation saying, we're like you in the U.S., and we're woke, and we know you have the trans agenda, and we want this equality and equity. And then you have Putin over there in Russia saying the West is killing themselves with this woke agenda, and we don't want that over here in Russia. And while all these nations are moving towards a central bank digital currency, which is the ultimate goal of the BIS, that is above both of them. So while we're being distracted and thinking about winning or losing to each other, we're all going to the same location that they want us to go. We're all walking into a digital panopticon, a digital prison. The G20, the top 20 countries of the world, met last year and all G20 nations agreed to put in a medical passport system. So you can get your vaccination, and if you don't, then it's in the passport and your movement is limited. So while the top 20 countries are fighting in France, who is now buddy-buddy with China, and they're turning their back on the United States, and now Saudi Arabia is breaking apart as well. It looks like that at the top level, we're all going into this same digital prison, and we're all moving into the central bank digital currencies. Now the BIS that sits at the top of all this, and the head of the BIS is a guy named Augustin Carstens, and he is figuratively and literally a big boss. Here's what he said in a recent video. Quote, "Our analysis on CBDCs, particular for general person use, we tend to establish the equivalence with cash, and there is a huge difference there. For example, in cash, we don't know who's using a $100 bill today, and we don't know who is using a 1,000 peso today. The key difference with CBDC is the central bank will have absolute control on the rules and regulations that will determine the use. The central bank liability and those who have the technology to enforce that are the two issues that are extremely important and makes a huge difference with respect to what the use of cash will be." So there you have it, directly from Augustine, that most people think CBDCs are just like cash, like a cash equivalent. We think most of our money is digital anyway, so we do bank transfers and wire transfers and ACHs and debit cards and credit cards, all digital anyway, right? So it's sort of like cash, he said. But no, it's nothing like cash. We will have total control, he says. Let me just repeat. We will have total control, he says. You know, with cash, we don't know who's spending that $100 bill. So that's a problem. But with CBDC, we're going to know everybody and everything we have control over. So next week I'll get into the Biden digital dollar, and we'll talk about the implications if our government continues to move in this way. So maybe this is all new to you. Maybe you've never heard of the things we're talking about in this series. And maybe you're thinking that it might be a good idea to do some investing in a decentralized platform. That's what I'm doing. I'm putting more and more of my financial assets into a decentralized platform where the government and banks cannot touch me. And if you want to learn more about one of these programs that is generating over 25% a month, I invite you to watch a webinar we did on this at the website www.818cryptoprogram.me. That's 818cryptoprogram.me. You'll find a webinar there that goes into this and learn how you might want to be involved. So take care. I'll see you next week. God bless.